Okay, let's get started. Good evening, everyone, and welcome to our Fireside Chat format by Reactor Berlin. I am Laure Poisson, the head of program at Reactor Berlin. And just to shortly introduce what we are doing or who we are for the founder and all the people who are in this chat. We are an acceleration program for pre-seed startups that are based in Berlin. And we practically support founders to bring their idea to life, to bring their idea to the market, to turn their idea into reality and to connect them to the right partner and investor. We started the program 1.5 years ago. We already supported 40 wonderful, amazing startups, and we currently have 7 startup teams in the program. We support them by monthly grants during the whole duration of the program. We also provide them with mentoring, coaching, and they have also the opportunity to work with us in a nice co-working space in Berlin. If you want to learn a bit more about us, about what we are doing, please just reach out to us or visit the website. But for now, I'm very pleased to have you to this Fireside Chat tonight and to welcome a great guest, Jan Alberti. Welcome. You are the managing director at BMP Venture, which is one of the leading venture capital company in Berlin that exists in 1997, already realized 250 investments. But we will for sure have more information about you and BMP Venture in a few minutes. And to moderate this talk tonight, I had the pleasure also to welcome Jan Schulte. He's a journalist, independent journalist, one of the founder of 3x3. He's also a journalist for Startbase and different media, and has a strong focus on sustainable finance. So welcome also, Jan, and I will let you moderate this talk, maybe just for the audience and some few information. We will have some time after the talk for Q&A. So if you have any question to ask, please, you can write in the chat, or we will just unmute yourself when we will tell you that it's the right moment to ask your question, so that we can have also an interactive talk all together. Jan, please, I let you the stage.
All right, thank you very much for your kind introduction. Just let me welcome Jan again, and of course our audience too. I'm very glad we are here together. I'm pretty sure that we will have 60 very interesting minutes, since Jan told me in a little pre-discussion that he has a very strong opinion against Series D funding rounds, and that he and his VC company, BMP Ventures, don't want to pay for completely overrated startups, which we see more often in the recent years. I think that are 2 very interesting points we will discuss later on. But Jan, before we come to this point, let's start with your personal background maybe. So you entered the startup sector in 1992, if I'm not wrong, as a founder. Maybe you can give us some insights about what the startup was all about and maybe why it failed.
Yeah, thanks a lot to Laurie and Jan and the whole team of Reactor to having me today. So actually, I didn't start a company in 1992. BNP was founded in 1992.
Oh, sorry, my bad.
Yeah, but I also had a startup in 2000. I can tell you later on. So I'm just to introduce myself. I'm 42 years old, married, and have 2 little kids, 2 girls in the kindergarten. Today, I'm managing partner at BNP Ventures, and we are managing mainly 4 venture capital funds, which are located in Saxony-Anhalt. And we have a strong history in managing venture capital funds. We have the 10th fund now for different kind of investors, and have a team of 18 people in 2 locations in Magdeburg and Berlin. So maybe it's of interest, and I try to bring it in a nutshell what I did before BNP. I'm with BNP since 2013. So born in Berlin, I studied business administration in Potsdam at the university there. And my focus was entrepreneurship, innovation management, and finance, actually. And yeah, during my studies, I did the typical internships with tech companies and consulting companies. To study business administration, was a very early decision for me because I stock traded since I'm 15 years old. So I wanted to learn more about actually investment banking. My only startup actually was in 2000. We had a small startup with 3 friends of mine, and we sold actually websites and did hosting for medium-sized enterprises and did a lot of network administration and sold hardware to them. In 2006, I had a short period in investment banking for 6 months. I wrote my diploma thesis with HSBC about convertible bonds for small, medium-sized enterprises, and we tried to refinance them at the bond market and in risk-adjusted packages. So after that short step in investment banking, the professor for entrepreneurship at the University of Potsdam asked me if I want to run an incubator for him at the science park in Potsdam, mainly for getting spin-offs out of the institutes. There are 3 Max Planck, 2 Fraunhofer institutes, and the University of Potsdam and the Hasso-Plattner Institute. So I did that for 6 years. We built up a full stack incubator there, full stack incubator program. We had premises, laboratories, and office space for startups. And we set up a venture capital pitches. We acquired a lot of money for them. It was for 60 startups, actually. We had 35 Access Gründerstipendien teams, 4 Forschungstransfer teams, and 2 Format teams. In total, we required around 20 million for the teams in pre-seed and seed money. In 2010, I also did my PhD there at the institute in Potsdam. I have a PhD in business administration. I did a lot of research about incubators, and my PhD topic was business models for incubators. So I tried to did research about how to run an incubator as a business model. Back then, there wasn't so many incubators in the market. I think Rocket Internet started in 2007, so it was hardly to find anything in research about incubators. Most of the research was back of 2000 of the Neue Marktzeit, so it was hardly to find enough things to write a PhD thesis about. So I did a lot of research in China and Europe. I've been to Cambridge and to Beijing. So there were a lot of really early stage startups coming out of the universities there at the institutes. The most known is Signavio. It was a spin-off from Hasso-Plattner Institute. So I was actually one of the guys who helped them to find money, to find the first million. After that first seed money, they did a lot of bootstrapping to the point where they had bigger rounds, growth rounds with growth VCs. And I got sold in 2020 with $4 billion to SAP. So I started with BNP Ventures, who in 2013 actually as an investment manager. Back then, BNP Ventures was not that as big as they are today. So they had a stock listed fund called BNP Media Investors and an early stage venture capital fund for the region of Brandenburg. We had 25 million under management there. And we invested that money in 23 startups, actually, all at the seed stage, 1 million each or up to 1 million each. I think the most known in that portfolio were Komoot, AdSquare, and Flightride. And we sold the whole portfolio by 2020, so we don't have that fund under management anymore. What we are doing since 2015 is managing the venture capital funds of Saxony-Anhalt. 4 funds, in total around 200 million under management. We can make pre-seed investments around 350K, early stage up to 3 million, and later stage up to 10 million per company. So we are usually investing pretty early. It's the first step, and then can do multiple rounds in actually highly innovative companies in all, not all, but in very much different technology sectors. I do mainly software, energy, and automotive investments, and we have a strong portfolio there as well. So besides the venture capital things, I'm highly interested in sports and mobility topics. And I'll also do some business angel investments when there's not a fit to Saxony-Anhalt or it's not innovative enough, or I see some special things which could be of interest for me as a business angel. I do so sometimes. Business angel investments, I have actually 3 now in the mobility and automotive sector. Yeah.
All right, thank you very much. That was a very long answer. Actually, you just pre-answered some of my questions, but it's no problem. Maybe let's come back. So after your business accelerator, why did you decide to switch to go to BNP Ventures?
Yeah, actually, when you helping companies, right, or startups in the early and seed stage, for the first year, you are not the guy who can see how it's growing, right? And when you acquire money for the startups, you are not the guy who can be at the point to invest on yourself. So that was lacking as an incubator in my career. So I decided to say, okay, I want to get the next step to early stage and growth stage. And that's why my decision was to go to BNP, and BNP Ventures at this time managed the Brandenburg Fund. And my incubator was located in Potsdam. So many startups I've supported had an investment of BNP afterwards. So it was kind of easy for me to create new deal flow for BNP and the fund there. And so it was, I know all the guys. So I'm with BNP since 2013. That's why, yeah.
Okay, great. So let's come to BNP Ventures. Since you are backed by public money, what does this mean compared to other VCs for startups? Maybe you can a little bit explain what it's all about. Yeah,
I think it's the easiest way to just start with BNP. BNP is around since the end of the 90s, and we did a lot of investments. I think 250 is not that anymore. I think we are north of 300 now. We had 100 exits and a lot of IPOs actually. So what we are doing there since the end of the 90s, we are managing venture capital funds and doing early stage investments in tech companies since 25 years actually. With a team of 18 people in 2 locations. We have a lot of investment managers, but the partners, I'm one of them, are also acting as investment managers. So we have around 8 people who are doing the investments, and then a back office of legal and controlling staff. So we are a hands-on manager. Usually we just have 10 max investment by. I have 6, 7 now. I'm supporting. So we try to be really hands-on and be a sparring partner for the companies. So we aim to be the first one who gets a call from the founders we're investing in when there are any issues or problems. And there can be a lot of operational and strategic problems. And usually the founders are very open to discuss that with us and see if we can help them by our advice or in the network or through the whole portfolio. yeah, we have also far-reaching network, and in the end, where's the difference with a just private invested fund? Actually, I don't see a real. It's not really different, because actually we are a private manager, which means we are, as BNP Ventures, is privately owned by the three partners, and we manage the company like a private venture capital company is managed, and it makes not the real difference if the fund we are managing is funded by public or by private money. I don't know if you know that, but most of the funds in Europe are funded by public or partly by public money. So I think the IFC European Investment Fund and KfW Capital funded hundreds of venture capital funds in the last decades. And most of the venture capital funds in Europe has around 10 to 30% public money invested. So we are kind of a special animal, because it is not that common that you have a private manager who's running just public funded venture capital fund. So, but in manner of getting deal flow for the funds and doing the investment, the contracts are almost the same. What is maybe special is that we have a lot of different tech topics we're investing in. So which means chips, sensors, biotech, clean tech, software, chemistry, actually recycling topics, but also mobility, and also automotive is a special thing we are very interested in, where sometimes private investors are not that interested in. So we are usually also very risk-taking, which means we are usually the first institutional investors who are investing in a startup, and very often north of $1 million pretty early. So we not necessarily need a proof yet to invest in the startups, but have to have a good feeling that the team is a good team, experienced team, and the plan and the forecast are kind of valid. And it makes sense to invest a lot of money. So we can invest up to 1.2 million on our own, and north of 1.2 million, we need private investors up to 10 million.
Sorry, there's someone I can hear. Can you please mute yourself? That would be great. I'm not sure who it is now.
Okay, I think it's working out now.
I think it works. Yes, thank you.
So there are two different. We have evergreen funds, which means we don't have any fund duration. The oldest company in our portfolio is over 20 years old. It's a biotech company, stock listed now in Amsterdam. They do research on a pharma, on medicine for Alzheimer actually. So you need a long duration and long-term investors to fund this kind of biotech startups. So we have evergreen funds, which means we don't need an exit pretty early, and that's why we can invest really early in high-tech startups. The other difference is we just can invest in companies which have a footprint or get a footprint in Saxony-Anhalt.
Okay, actually, the second point is quite interesting, because I'm pretty sure that most of our audience are now based in Berlin, so that sounds like a little hurdle, doesn't it?
It narrows our deal flow, for sure. So, but when you look at BNP.com, you don't see that we just name it there, that we just can invest in bigger rounds in startups in Saxony-Anhalt, because usually we want to have a big deal flow, right? And then maybe discuss with a startup when we like to invest in it, if Saxony-Anhalt could be a fit for them.
Okay.
And so sometimes it is helpful that we explain why Saxony-Anhalt is a great place to raise their startups.
Okay, that's a good question. Why is Saxony-Anhalt a great place for startups? So despite getting your money and getting your help, what else is maybe?
It depends what kind of startup you have. You have different. Saxony-Anhalt is not on the landscape of the startup ecosystem in Germany, for sure. But it develops very quickly, and we have different kind of hotspots in Saxony-Anhalt which could be of interest, which are not known in the scene. So there are different cities like Magdeburg and Halle, for example. In Magdeburg, there will be Intel in a few years, which get a really big chip production over there with 20,000 new employees. I think the startup ecosystem will boost in Magdeburg because of that, because we will get a lot of other companies which get located around these big Intel site. We have Halle, for example. It's pretty good to have a biotech startup there. There are a lot of universities, and the biggest science park of Mitteldeutschland is also there. It's a Weinberg campus. It's a really great place to get your biotech startup or pharma startups there. In Bitterfeld, it was called the Solar Valley of Germany, and it's coming back. Actually, we get new solar and battery startups over there. Another city is Lutherstadt-Wittenberg. We have Tesvolt over there, the battery storage management hardware and software solutions company, one of the biggest actually of Germany now, and we were the lead early stage investor of them. And whole Saxony-Anhalt is in the middle of automotive OEMs. We have in Wolfsburg, we have Volkswagen. In Grünheide, we have Tesla. In Leipzig, and Halle is pretty close, just 30 minutes away from Leipzig, we have Porsche and BMW. So it's a great place to talk about mobility and automotive startups as well.
Okay, so but I'm just wondering, how often does investment talks with founders fail at the point you tell them that they need to be settled in any way in Saxony-Anhalt?
Very often.
Yeah. Okay.
So it's vice versa. When there is a startup which wants to get venture capital from us, it's not very often that we say, okay, great, let's have further talks or send me more information or whatever. And sometimes we are not interested. When we are interested, we talk to them, we maybe have the first call, and then it's not that the company has to settle completely to Saxony-Anhalt, but the money we are investing has to be there for the cost the company has in Saxony-Anhalt. When it's early stage, the company has no revenue and no co-investors, the company has to go completely to Saxony-Anhalt. When they are co-investors and there are maybe 20 employees, and we are not the only investors, and the company already has a revenue, it might be also okay when there are different kind of locations. And when the company is growing, when they're starting in Saxony-Anhalt, they also can have other locations in the future.
Okay. Actually, your website is full of information about your investment process, about which document and which numbers you are looking for. I think that's a little different to other VCs. Why do you already give so much information to founders? What's the idea behind it?
That's a good question. Actually, we don't know. No, actually, I think sometimes it's not very transparent for startups what a VC is doing with their information. And we also want to be completely open how long what is the process about how we do the investment, what kind of stages are there, what kind of discussion points and decision points we have. And so that's why we want to have it completely transparent how we do investments actually. Okay, so actually amongst all this information, I've discovered a very interesting sentence. It's called "You're not looking for the next unicorn." What exactly are you looking for? Tech. Yeah, tech. Just in one word, it's tech. There are innovative companies. It could be also innovation in the business model, but usually we like to invest in tech and we have to invest in tech. We can't invest in copycats. And there are a lot of unicorns, which are unicorns because a lot of investors think it is worth €1 billion. And that's not what we are looking at, which means we don't need to be the 10th co-investor in a Series B round. We like to do early stage investments as the own institutional or with co-investors and get real good technology with a sustainable approach in the market after several years. That's what we are looking for. We are not the VC who is just seeking to get the next unicorn in their portfolio, and not. We are also happy with startups which can be exited for 50 million, 100 million, 150 million, or sometimes just 20 million. So we also like to help startups in our portfolio which are not running that well, right? So we really want to help entrepreneurs in any stage, in any case, and not just help the best 20% of our portfolio and get rid of the rest. That's not what we're doing, and that's not our management approach.
Okay, regarding that kind of startups, since you are backed by public money, are there any risk limits for your investments?
No. Yeah, there are risks. We have to do risky investments. There have to be a risk in our investments. We are when there's no risk, and it makes no sense to get tax money in startups. Yeah. So there is a lag in the. Still, I think it's still a lag in early stage in the market for real high tech startups.
Okay.
So most of the private investors said, "Hey, it's way too early. You just have a prototype. Get the next step. Get back to me, and I will maybe invest in the next stage in your startup." And that's the point where we have to look at the startups and decide if it makes sense to invest, for example, 1 or 2 million. At that stage, when nobody else or just a few others decide to have the first investment in the startup.
Okay, why do you think there is a lag? Is it more that investors don't have the knowledge to understand the potential of these tech companies? Is it more that they don't have enough money backed, for example, by Sachsen-Anhalt or by any other federal institution? How does this look?
What I said is, it is pretty easy to do such kind of investment when you have evergreen funds. And I don't know many evergreen funds. The family office could run an evergreen fund because it's their own money, right? But when you're investing private money and the investor is looking for high interest rate on the money is investing in a private venture capital fund, it needs to get back at a certain point. So we are exit oriented. We want to exit the stakes we have in the startups, but it's not necessary that we need to do it in 5 or 6 years. So when you have a duration of 10 years in a startup and you invest with a venture capital fund in the 5th or 6th years of the fund, you just have 4 or 5 years to sell it. And when you do early stage or seed stage tech investment, you forget it that you get after 4 or 5 years an exit. Okay. So that's one point. The other is, tech also sometimes means that it's not just software. It also means that it's sometimes also hardware you're investing in. And most of, I think 90% of all venture capitalists, at least, the VCs you see in Berlin usually don't like to invest in hardware.
Okay. Okay, since you're on the VC business for a few years or for many years, depends on the point of view, maybe. In your opinion, what changed during the time? If you're looking maybe back the last 10 or 15 years, and maybe which developments do you see in a more positive way and which ones are more negative in your opinion?
In 2000, when I had my own startup, there were no support for startups at all, actually. Nothing I can remember, actually. But at that time, I didn't look at this kind of support. So maybe there were something, but I don't know. It started when we started the incubator in 2007. Then the time started when you saw this kind of boost in Berlin of startups, the startup and venture capital ecosystem. So since I would say since the last decade, since 2010 maybe, it's a tremendous time to launch a startup, to found a startup. So what you should know, after the financial market crisis in 2008, interest rates were extremely reduced, and to save the banking system actually. So this increased the liquidity tremendously, right? It was so much money in the market. And because of the low interest rates, the bond market was not that attractive anymore, and the stock market raised tremendously, especially the tech stocks, right? When you look at the stock market, we have multiples of 2 or 3 or 4 on the Nasdaq. So there were a lot of new incubators and accelerator programs, corporate VC spread out everywhere, and I think that for the first time in Germany, business angels started to investing higher amounts of money, not just 5 or 10,000, but also sometimes up to 1 million. So also startup valuations risen sharply, and you got the chance to raise a lot of money in your startup and to get your startups pretty big. So financing wasn't hardly the bottleneck in the last 10 years, at least when you have a growing and good working out startup. What is pretty hard now is to find good people. Mm-hmm. The salaries are getting crazy. They are switching their opportunities the whole time. So sometimes when I see a startup and investing in a startup and they say, okay, let's have 10 new employees and 5 of them are, for example, Android developers, I still do the investment, but I know it's pretty hard to get the people which are forecasted.
Okay.
Yeah.
As I mentioned in the introduction, you don't like overweighted startups, and you, your company, don't want to invest in such startups. Maybe you can give us a little bit more information about that. What do you mean by overweighted startups? Maybe you're looking in the last year or recently.
Yeah, it's the same with real estate, right? They're overpriced sometimes. So actually, high company valuations are actually not a real problem, right? A startup is only worth as much as someone is willing to pay for it. So, as in the end, when you are able to sell the company to such high prices in a trade sale, you're fine, or doing an IPO with that high valuations. But usually, just because a minority VCs or business angels drive a valuation through the roof doesn't necessarily mean that it can be realized at an exit. In a trade sale scenario, for example, you have to find a buyer who's willing and is able to pay a strategic price for the startup. And when I say be able, they are maybe the valuation is that high that you don't find a corporate which has enough liquidity to buy such high valuations, nor has the M&A team to evaluate and to buy and implement the startup afterwards, right? There are a lot of VCs today which have an unrealized portfolio, right? Mm-hmm. So they invested for 10 years and have now a 5x portfolio in their portfolio with unrealized valuations, and didn't sell anything of them, and try to or thinks that the Series D and E and whatever brings the valuations to a much more and higher, and don't think about how to exit them.
Okay, so in your opinion, that's what I introduced to, is there's no need in general for a Series D funding round. Did I get that correctly?
No, you don't. It depends.
Yeah,
it depends. But some business model, sometimes I'm wondering how much money you need to evaluate a business model. It's said then very often that you need more growth, and growth costs profitability, and which means you have to spend much more money, and you need a Series E, F, G, whatever. Then you have an IPO, and the business model is still not running well, so you are still not profitable. So yeah, when there's so much money in the market, it's maybe easier to raise more money than to get profitable. That's what I say. Okay.
Actually, if there are more and more startups which are kind of overweighted, and some VCs are willing to fund them, what does this mean for BNP Ventures? If you are not willing to pay such high prices, can you still compete with the other VCs? Is that already a problem?
No, not really.
Okay.
I wouldn't say that we sometimes kick out of a round because we are not want to pay high valuations, but it's not all about the valuation, right? There are other things like other terms in the term sheet where you can handle this kind of things when the valuation is pretty high. So as long as they're a private investor we can co-invest with, we are not that picky what the valuation is. And since we are usually investing pretty early, and when the startup is working out, we are usually doing an exit to a higher valuation than we invested in. So it's not a big topic for us.
Okay, I have another question about the startup bubble and the INcubator bubble. So there's an often discussed financial gap, maybe not about pre-seed funding rounds, maybe about more like 50 to 30 million that can't be backed by German VCs because they are too small. Do you agree on that position, and do you think that this is a problem?
Yeah, it is a problem, but actually the German VC scene is not that mature already. So that's maybe why the growth funds are not that big. And what is still the case that we have in Europe, we still have a fragmented venture capital market, right? We have different kind of legal regulations, we have different kind of languages, different kind of markets and regulations over there. So it's not like in US where you have 300 million people under the same regulation. So maybe that's why we don't have so many growth funds, really growth funds, which can be, for example, doing investments of 50 or 100 million in Europe. But in the end, it doesn't matter, right? Because the American VCs are having they're also located now in Europe and Germany, and
so it's
I'm not sure if it's a growth problem. Actually, yeah, when you have bigger rounds, the private equity approach is sometimes not fitting to venture capital, highly growing companies, which needs higher valuations because they're much faster growing. So there may be a lag, but you still get money in the market. Maybe not for real tech. When you have real tech startups, which needs a lot of R&D, that may be a problem of getting growth capital. But this typical delivery hero approach, you get a lot of money in the market for this kind of approaches, I think, still.
Okay.
Also in Europe now.
Okay, since we are a little bit running out of time before we will open the discussion for our audiences, just let us switch back to your job as a business angel. You already mentioned it in the beginning, but can you give us some information of what kind of startups you're interested? Maybe how much money do you spend and how you support these startups?
Yeah, sure. So usually I invest 20, 30, 40, 50, up to 100K. As BNP partners, we also have a vehicle we are investing together. Then it's maybe some more, like 200, 300, 400. Usually we're investing pre-seed seed. When I'm doing investments by myself, I like mobile topics, mobility, and automotive topics. So I have 3 now. One is Calimoto. It's a navigation and routing app for motorbikes. I'm invested in, I think, 2017. They are now, I think, the most successful app in the market. It's working out in the whole world. Actually, I think we have around, last year we had around 600,000-700,000 monthly active user. It's the summertime. And they are profitable, growing nicely. I'm invested with, I think, 8 other business angels. Usually I'm not doing the investments on my own. I try to get other business angels, which could be a great fit to the company. And actually it's also the same approach like I'm investing as a VC. I try to be hands-on, helpful for the startups, and usually calling me pretty often when there are problems or when they need help. There are two other ones. One is Autovio. It's a driver license, digital driver license teacher marketplace. They started last year. And the last one is auteon. It's a marketplace and software as a service for auto workshops to order car parts, actually. Yeah.
Okay, so so far, thank you very much. I've seen that there are already a lot of questions in our chat, but you can also feel free to unmute yourself and ask the question by yourself. I think it's not now a good time to open the discussion. If you have any question, maybe sorry, if there is anyone who wants to start, feel free. If not, I will start with the questions on the chat.
Yeah. May I start? My name is Mike.
Yes, thank you.
Mike.
Hi, Jan. Thank you very much for sharing your impressions with us. May I ask the following question? It's really interesting that BNP is now like investing in Saxony, in Sachsen-Anhalt. I think before it had like a focus on Berlin and Brandenburg, maybe. How it is decided that it goes like from, let's say, Bundesland to Bundesland with its investment focus?
Actually, since the new market bubble burst, there was a hard time to get venture capital funds right under management. And back then we started with KfW. We had a fund, so it's called Single Investors Fund. There's a single investor. It was a KfW, then it was Brandenburg. Now it's Saxony-Anhalt. Actually, the money in Saxony-Anhalt is not coming just from Saxony-Anhalt. It's also 75% is also coming from Europe, right? To get this whole region, more startups in this region and support these tech startups in this region. So it was, yeah, actually it was by accident, let's name it, yeah. And we are really experienced now in doing that accident, actually in investing with public venture capital funds. So, yeah, why are we doing that? We can earn a lot of money with that, and can do really great investments because of that evergreen issue, and this really focus on tech early stage investments. So that's why we like to do that, and we think we're pretty good in that.
All right, thank you very much.
All right, anybody else? So if not, no problem. I will start with the questions we already got on the chat. So first question, Jan, how do you get to know the team to make a decision it's a good team? Is there a deeper process in place?
It's pretty tough to evaluate teams, and if a team is able to get their idea to the market and to make an idea big as a startup, it's pretty hard. You can't actually. You have to feel if they are risk takers and they really stick with their idea and doing that full time and with their heart. That's what you have to feel actually. When that is the case, you also have to look. Can you discuss with them certain points, which maybe not that good or could be discussed to optimize it in the future. When you have this point and you have a team which is not just consisting of business administration guys, there are also tech guys in it and different kind of personas in the team, it might be a good team to invest in.
Okay, so there are two more questions about your investment process, I guess. What's the optimum a startup team brings to your table asking for an investment at your firm? So what should they deliver? It's more or less the question, I would guess.
Drive. they should like to go all into to get their startup done pretty well. So usually I like if they spend a lot of time in try to get the right fit to the market, discuss their product with the market, talk to the customers, try to find the real best way of creating the tech stack to develop, and also be very open to discuss their idea with other people and sometimes also with competitors for corporations and whatever. I'm pretty happy when they are not in the stealth mode, but also try to find ways to evaluate their idea with other people before they came to us.
Okay. Another question, maybe a really hands-on question, I guess. How important is a business plan nowadays, and are there traditional contents that doesn't play a role today anymore?
Forget a business plan.
Okay, forget a business plan.
At all, actually, you should. There are certain topics in a business plan you should be pretty aware of, but to write a text 30, 40 pages, forget that. You need a great pitch deck, and to create a great pitch deck, you need weeks, maybe not months, but weeks. It is pretty hard actually to create a good pitch deck, not just which is looking good, but also where the details in it are pretty evaluated. So pitch deck, and what I mean with business plan is usually a financial forecast. You should be aware of your costs. You should talk to the market. You should talk to service partners. You should test your marketing funnel, maybe with small amounts of money, so that you are not just have predictions of a marketing channel costs, but have a real clue about it. And should be aware of, sometimes startups are forecasting 60% EBIT margin. And I'll say, okay, there's no company with 100 million with 60% EBIT margin, maybe BioNTech. But just take a look on stock listed companies which have maybe a similar business model as you have, and you can see what kind of cost structure they have. That's maybe good advice.
When you're saying a good pitch deck, maybe what are the 3 or 4 most important slides in a pitch deck, in your opinion?
Team. Yeah, it's traditional, right? Problem, solution. I like a tech stack slide. So how do you want to build your tech? And how can you explain it to a business guy like I am? Yeah, and something like how is your sales structured and how is your marketing structured? And for sure, most of the startups are not pitching their cap table, and you should do that also.
Okay, another question: which are the most successful funnels or strategies for finding the startups you invest in?
Usually, our network is working out pretty good. So it's not this passive deal flow when someone is just emailing us with info@bmp or startup. Actually, I think it's info. Usually, when there are network partners of us who send us a pitch deck, that's working out pretty good. So when I take a look in our portfolio and see how the startups came to us, usually it's via our network. There are just some which are very successful, which are coming cold to us.
When you're looking at the startups you've already funded, which is the best one or the most successful one?
Yeah, it's pretty easy. I think it's what I said. As an incubator was Signavio, with the Brandenburg Fund, it was AdSquare, Flightwide, and Komoot. And now we have 2 stock listed biotech companies in our Saxony-Anhalt portfolio, which are Munich and Vivo Rhine. We have, I think, hopefully in the future, the most successful will be Tesvolt, the battery storage company. They are running pretty well. Twinner is also a big startup, which could be very successful. And we also have a lot of other early stage startups, which we are looking great, actually. And we'll see what they can bring us in the future.
Okay. Do you still remember the worst one you've invested in, maybe as a business angel or with BMP Ventures? Or do you want to tell us about it? The worst one.
I wouldn't tell you that.
Okay.
But there are some.
There are some, okay. Okay.
Yeah, actually, you have sometimes invest in startups which are failing, right? Otherwise, you are not making a job. But I'm not talking about these startups with you guys. Not to it's not about me, but it's about the founders, right? I wouldn't do that.
Yeah,
they are all great people who are running great ideas in great markets.
Yeah, it's the whole problem in Deutschland talking about failure culture, but
yeah, but you have to talk to the founders, right? I see the founders as our customers. I wouldn't talk bad about our customers.
Okay, no problem. There's another question on the chat. I'd like to ask you, how much stake do you take for pre-seed investments, for example, for 30, 50, or 100,000 K?
We can't invest as a business angel or as a VC.
Actually, it's not mentioned. Maybe both.
Okay, that's totally different. As a business, as a VC, we can't have more than 25%. Sometimes we can, but we don't. Yeah, we have some subs where we have more than that, but then there are some special issues why we are doing that. But usually in the early stage, we like to have 15 to 20%. But when we invest $1 million or more, we not necessarily invest just with equity, sometimes also with convertible loans.
Okay, so why 15 to 20%? What's the idea behind that?
Actually, I don't know. The founders need a majority of the company for a long time, right? But you need a stake where you have, when there's a great exit, where you have a great mitochondrial investment. So it's about valuation and about the share you get, right? So I don't want to have a majority of a startup and the founders are just employed there. I don't want that. So I don't want to have much more than 25 or 30% maximum. I usually would like to have 10% at exit time at a valuation of, for example, 300 million. That would be pretty nice for me.
Okay. So
as an angel, it's totally different. As an angel,
yes.
When you just invest 50K, right, you can have maybe 2, 3, 4, 5%, not more.
All right, thank you very much. Right now, there's no other question in the chat. Is there anyone else who has a question? No, it's your time to unmute yourself and ask.
Yes, I do have a question.
Thank you.
First of all, Jan, thank you very much for all the very hands-on information. When you said it could take weeks to design a good pitch deck, this made me curious what you would what you see takes that much time and how you would divide it. So what do you expect to, or what's your experience that takes so much time to actually create a great pitch deck? Is it the financial forecast, which you said has to be very, very solid, or what else is in there that takes or consumes so much time?
That's a tough question. Actually, we also try to optimize it, right? Because we are not just look at a lot of pitch decks, but we also help to create pitch decks together with our portfolio companies and the founders. And it's a hassle because it's always a status, right, in the pitch deck. When time is running, when you're doing fundraising, it maybe took you months to get the fundraising, and then the information you have in your pitch deck are not valid anymore or are not current anymore. So it's a time issue in your pitch deck. On the other hand, it's pretty tough for complex tech startups or markets or teams or whatever to get reduced to just 20 slides or 15 slides. And you need a storyline as well. So you need a red line through the pitch deck. It has to be sticky. A VC usually invest, in my case, 5 minutes in the first step to look at a pitch deck. So you have to have a great storyline. It has to be a great look, and you need to get all information maybe a VC wants to see or a business angel. And that's a tough thing. So, yeah.
So it's actually like modeling all these minor things together in a like cohesive story, looking nice, being sticky.
In a snackable way, and you have to do it that most of the people think that's a good pitch deck, right? Because some people I like, for what I said, I like timelines actually, where you see your idea as a founder, how you would like to run your startup over years, like the sales, tech, financial steps in your forecast over years. And I like a tech stack slide, and there may be others who say, okay, I don't mind. They may have a good tech. I could discuss that in the second step. So it's hard to find something which is good to read for the majority of the investors in this case, right?
Thank you. I do have one more question. As a startup looking for pre-seed funding, how would you approach angels or VCs? Would you just go out and do cold mailing or send them the pitch deck over their forms? Use LinkedIn? Like, what would your strategy be?
Yeah, well, in my opinion, as an angel, I would like to see the pitch deck immediately. There are a lot of founders who want to get advice and want to have a phone call. When there's a tremendous great fit to me, I would do that. But usually I want just to see the pitch deck. And then I'm really quick in deciding if I want to talk to you guys or not, because your time is as valuable as my time. So I don't want to waste your time, because your time is even more crucial than my time, because I'm doing that since 15 years and I will do it in the next 15 years. So, but you are running out of money when you're running a startup in the early stage. So I usually don't want to talk to startups and waste their money and time. So send the pitch deck to them, and find some fit to the guy you're approaching.
How much emails do you get a week by founders looking for an investment?
Myself?
Yes.
Good question. I never count them. Maybe 200 a year.
Okay. So directly to me, right? Yes. Yeah.
To the company is much more, but directly to me via LinkedIn or via email, it's around 200.
So, and that's the reason why you said find a direct link to a VC or a business angel you are asking for.
Right.
Okay.
And a direct fit to them.
Yeah. All right. Okay. So we have more or less 1 minute left. Is there any question left you want to ask? Maybe just one more question, please. Okay, I can't see anyone. There's one last question in the chat. It's again about the stake as VC and as a business angel. So the question is, maybe you need to explain it a little bit more. Where does the big difference come from? And did we understand it right that VC means 15 to 25% for 50 to 100,000 K, and business angel 3 to 4% for 50,000 K funding? Okay,
maybe they didn't explain it well. So usually as in VC, we are investing north of $1 million.
Mm-hmm.
Or more. Actually, our sweet spot is 2 to 3 million.
Mm-hmm.
We have plenty of investment, like I think 6. We invested more than 5 million. And 3, we invested almost 10 million. So that's what we are doing. Early stage investment with kind of high amounts, right? Really early stage. Sometimes I think 30% of the companies we are funding are founding the companies together with us or are just 1 year old. As an angel, I'm not doing so many angel investments. I'm a venture capitalist full time. I have 2 kids at home. So when I'm doing angel investments, I maybe do it once a year or once in 1 and 2 years. The fit has to be pretty good. But sometimes I know some other guys who would like to do an investment. Maybe I see a fit to other business angels. My network is not that bad in this case. So why I just want to have 1 to 2, 3% with that small amount of money I'm investing as a business angel. You cannot get that far, and I don't want to have a big stake of a company for just my few euros, because then I know the cap table is crushed and we won't get any further money when there's a business angel who has 10% for whatever, 30,000, for example.
All right, thank you very much. So yes, thank you very much for your time, and thank you very much to the audience too for all the questions you have asked. A very interesting talk, I guess. I would like to switch back to Laurie. Maybe you will.
Yeah, I would just have like the last, just the last word, but it's just like to thank you, Jan Alberti, for your time, for sharing these inputs, very insightful, and your perspective as investor. I think it's for the founder super interesting, and you are welcome to visit us also at Reactor and to chat with our startup. We will be glad also to make some good, interesting matchmaking. And Jan, thank you also for the moderation tonight. It was also like very interesting question. We will have another fireside chat at the end of the month with a founder. She's the founder of Kinderly, a startup based in Berlin. So you are also welcome to attend this event and to follow us on LinkedIn. Wish you all a very nice evening, and thank you again for your time and being here with us tonight.
Thank you.
Thank you very much.
Bye-bye.
Thank you. Bye.
Ciao. Thanks.